Well, ladies and gentlemen, this time is no different, and we got to pay close attention to this little sector over here. Keeps on creeping up on the leaderboard. Energy. So we're going to dive into some interesting charts today on the Stock Market Brief Show. We'll also get into various charts in the S&P 500, discuss market conditions, and how I plan to navigate through it. Oh, let's get into it. All right, people, welcome back to the show. Heat map of the S&P 500. Nvidia took a little bit of hit on some news today. Tesla up 5.62%. We had Apple up, Google up. Not too bad. Out of the 11 sectors that make up the S&P 500, energy did lead the way, followed by consumer communication services and consumer discretionary. As far as the main indice products, S&P 500 finished up about 40 basis points. Dow Jones was slightly lower. The NASDAQ composite was up 60 basis points. So what does this all mean? Well, the market's kind of just digesting its prior day. Now, I want to hop into energy. More specifically, let's take a look at oil. Oil had a big reversal today. From the low print to the high print, we've basically opened at the low and closed at the high, engulfing the prior day's candle. So is oil going to start potentially rising here, or was this because of just some news recently that came out about geopolitical tensions? Or is it because the dollar came off today? Is that why oil rose? And if the dollar wants to come off further, will oil continue to rise? Well, that could possibly be the situation here. The dollar came down. Gold actually bounced from this trend line that we identified on the prior episode. And then copper also found a little bit of its footing here at this lower trend line while the dollar was down too. But I want to get back to oil. Now, why do I want to talk about oil? Well, because oil has a very strong correlation to energy, which is XLE. We're going to use that as the proxy, which is the spider for energy sector, right? And if we look at a 20-day correlation, what do you notice down here, right? This is the zero line. So anything above the zero line means it's a positive correlation, which means what? It means when oil goes up, energy goes up. When oil go down, energy go down. And below this is the negative correlation, meaning that they do the opposite. If oil were to go up, energy can come down. And if oil went down, energy could go up. And what do you see here? Well, I want to point it out. Now, don't look at the little recent area right over here as it dips, because it does. But what do you notice most of the time it spends in? It spends the majority of its time in a positively correlated state. Now, this is important to know. Why? Because this chart right here. This right here up top is the energy sector relative to the S&P 500. We're using SPX here as the proxy. So this line basically means when it goes up, it means that energy outperforms that S&P 500. On the flip side, when this line goes down, it means S&P 500 outperforms energy. And what I found interesting about this specific line here, if you look down, when it goes up, what does the S&P 500 typically do? Well, during this big pop-up in 2022, the S&P 500 was in a bear market. You can see this pop up right here in the very short term here, and that led to about a 10% correction in the S&P 500. You see over here this quick pop over here, and then we saw this quick drop over there. And on the flip side to this, when the line goes down, the market goes up. Now, in recent trade, what do we see? We see this line starting to find some relative strength while the S&P 500 is coming off a little bit. So this is where they're not different. It's not different. When energy outperforms, it could be bad for the S&P 500. So we need to pay close attention to this. Now, if I zoom out and we take a look at the weekly chart of that relative performance line, and I'm even applying a 200-period weekly moving average. So we're talking big term trend over here. What you see is that you can actually use technical analysis on these relative strength lines. You see the higher lows broke out of a pivot, boom. Then you could see we held up as support here, support, support, support. And then once we dropped, it ended up being a topping pattern and actually kind of had those three peaks, right? You could see these three peaks here, these lower highs, as we're moving closer into this pivot line, and then we broke down and it followed through. Over here, you can see an inverse head and shoulders. We cracked the neckline and we started rapidly moving to the upside. And this is really what put the S&P 500 down in 2022, was this inverse head and shoulder break. Now, why am I bringing this up now? Because we need to just be aware that if this is a tightening structure taking place right now, a wedge formation after a nice big run up, and the 200 weekly moving average is trending higher. If this does want to start moving and breaking to the upside again, well, that can obviously put pressure back into the S&P 500. Now, that's not what I'm predicting to happen, but if it does, please be aware of it because, well, as we previously stated, this time it's not different. Let's go ahead and look at some of the energy names just in case, right? If energy is going to be outperforming or oil is going to be outperforming the S&P 500, let's take a look at some names. Now there's so many names that are consolidated, but here's one that's NOG, right? So I'm just using this because it's currently consolidating right now. That's the only reason why I'm showing you this, right? We're above a 200-day, 2050, right? It's been going flat all year. We recently broke out of this and we had a strong earnings. And after strong earnings, I like to look for these periods of consolidation. So, hey, perhaps this one, if energy stocks are going to outperform, this might be one to continue to watch. I've been watching XOM here. It's been getting very, very tight. We saw a recent trend break and that happened to hold above this prior pivot zone. And we saw a little bit of strength today, but overall, the price action is really just kind of consolidating here sideways after seeing a nice little bullish earnings move. And we're above a 20-day moving average currently, 50-day, and that 200-day right there. So there's a couple of names that maybe, if energy wants to continue to perform here, could potentially play to the upside. Now, if we take a look at various sectors, more than the 11 sectors, right? We're including XBI in here and then also semiconductors over here. But what you'll notice here while I'm looking at various trends, you'll see a lot of red on the screen, which means what? It means they're below their declining 5-day moving averages. So we're talking technology, XLY, right? Not energy, sorry, XLB, XLC, XBI, XLV, which is healthcare. XLRE is yellow, it's getting back above it. And then we have semiconductors here too. So a lot of the bigger names are below their declining 5-day moving averages. And the ones that are in green is energy, financials, and utilities. So utilities being more of a risk off type asset. And then we have energy and then financials here too. And these could be considered rate sensitive sectors as well, especially utilities. Now, financials, if financials wants to continue to move, you might also want to continue to look at financial names here too as well. Now, I know that there's going to be bounces within declining 5-day moving averages, but the reason why I'm calling this out now is because we're seeing clear relative strength in some of these sectors, and they're just not here yet in technology, biotech, right? Consumer discretionary yet, but they very well can be in a very short period of time. So it's important to watch for these 5-day moving averages to flatten out and start to turn back up to potentially catch a new change in the shorter term trend. Now, if we're going to take a look at some financial names, look at Citigroup. Right? Citigroup saw this big gap up, right? And then we started to consolidate this gap. So if we consolidate here and we just flag out and the 20-day catches up, the 50-day, 200-day, perhaps there's some more steam in the tank here on Citigroup. You can look at Capital One Financial, very same situation. We saw these big gap up. And there's so many different names. You can go into regional banks there too as well. These were just some that happened to be on my tight list this week, so I'm just sharing them. I'm not really looking to trade financials. It's just not my cup of tea. But these are, and if I do trade them, it'd probably be with like one of the ETFs. But these are still consolidating in bullish context here. And if they want to start breaking out of these patterns, maybe we re-go test those highs or continue higher. So that could be something to watch. Now, unfortunately, what you also need to pay attention to when it comes to these rate sensitive sectors or including financials is, okay, we saw this big run up in financials and financial names. Well, the 10-year yield has been rising too, and they do go hand in hand for the most part. And I'm bringing that up now is because we did have an inside day on the 10-year yield. It started at the high and closed at the low. We have that negative divergence and the price momentum oscillator is starting to curl over. So if this starts turning down, are we going to start seeing some weakness here in the 10-year yield, potentially might hurt financials in the near term? We might see a lift in bonds. And if this does start to come off and digest potentially here a little bit, can that actually help once again, the tech sector kind of get up from its little slump? Let's go into the S&P 500. Now, I know we had an update today. We had a down week last week. And what does it look like? Well, we're above a weekly 5 rising EMA. Okay, so weekly 5 EMA, we're rising above it. All we did last week, it was a lot of treacherous, right? That crazy day there on Friday. But really, we just pulled back to about 50% of this prior weekly bar into and around that 5850 level, which is very important. We're still above the rising weekly 5 EMA, so things still look good. It would look worse if we start cracking underneath it. and we get underneath the weekly 5 EMA, and it potentially starts turning back down. Now, if we take a look over here, what's this look like on the daily time frame? Nothing. It's a consolidation. You get an expansionary move, you get a consolidation. You got an expansionary move, you got a consolidation. So this is just an inside bar here. So if we start cracking through the low, be careful. If we start cracking through the high, hey, maybe that helps us to, well, fill one of these gaps, right? You see a gap here that's left open, a gap here, and I can guarantee you this. We're going to close one of these here in the very near future. Which one that might be, couldn't tell you. But if we start breaking above the high, I would think that we can come and close this. If we start breaking below the low, there's a possibility that we can come down there. There's also something called an island reversal, right? You may have been hearing this candlestick pattern called the island reversal, how we had a gap up, right? We kind of traded here, created a little island, and then we gap down, leaving this open airspace, which can mark potential reversals. Now, on the flip side of that, we also saw that right down here, right? We gapped down, we left some airspace on this big gap up, and we started ripping up further. So where are we going to end up? Well, as it stands right now, below a declining 5-day moving average, you got to put caution out there until that changes. Okay, that's how I approach it. Now, if you look at something like the 5, 10, 20 timer, you can see here that the 5 is still above the 10 period, which is above the 20. So it's not necessarily all too bearish. It gets more bearish when you start seeing the 5 below the 10, below the 20. And you can see that the last time really that we did that was right over here and saw some pretty significant sell side. Over here, it kind of happened very, very faintly, and then we recouped it and we started getting back traction, and it held for quite some time. And then over here too is the same situation. Very, 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 very quickly did it hold stacked in the bearish formation, and now it's not there quite yet. Let's take a look how the daily implied move took place today on the 15-minute time frame. Today, it's always important if you get a large sell side activity like we did on Friday to just go ahead and anchor a volume weighted average price to it to use as a guidepost for the following day, which was today. And early in the trading session here, I saw we started bumping our head back up on this anchored volume weighted average price. And this right here is a good psychological level to know, because the average person, right, from all this sell side activity, all of a sudden we start to turn in a more positive psychological kind of attitude, given the context that the average person from this day is now in the green, right, based off of volume. So when we cross through this, boom, we shot right up to that daily implied move, and we've really just been consolidating this move sideways, holding above the week to date and holding back above that Friday. Now, if we update these specific levels and do some other basic technical analysis, I want to give you the daily implied zones, which is about 582.38 to 585. This is going to be the daily implied zone for tomorrow on the low end. And to the upper end, we have 591.30 and 590. I'm just going to call it 594. I'm going to round. So if we do start breaking out to the upside, you can notice that we have about a 2-day compression pattern here. So if we start breaking to the upside, just be aware in this area as we have gaps that have been left open. We have a declining 5-day moving average. We have our election VWAP, and then we have the daily implied move. So we have a lot of stuff right here in confluence that price can get hung up at. And if we start breaking through this even further, that'd be the upper weekly move. We'd be near the upper monthly move. So if that was the case, just know it could take some time to consolidate for the 5-day moving average to turn around, to flatten out, and it might potentially set up for something bigger in later this month, potentially December. Who knows? Now, on the flip side to this, right, we have this 2-day compression pattern, right? You might look at this like, oh, it's a little cup with handle right here. And I would say, yeah. However, if you just flip that on its head and you like, look at this, well, this could be a kind of a cup with handle in a way too, right? But an inverse cup with handle, right? It's more of a rounding top here than it's handling out. So if this does break down, I mean, this can open the door right into that lower weekly implied move, which is at 575.92. So, like I said, we have the daily zones. We have price getting pretty tight here. If it starts breaking to the upside, I'd be looking up into this range for tomorrow. If it starts breaking down, I would just hold on and be quite cautious, hold on, hold off in getting too aggressive until price action starts to see a series of higher lows, right, and higher highs, and maybe perhaps we get above that rising 5-day moving average. As it stands right now, when we take a look at gamma, we are in positive gamma territory in this current moment. It's roughly at about 58.85. And there's a very key level that you want to hold above, right? 58.50. I'd say we're bullish above 58.50, but be very cautious when we get below it until we get some more data, right? To come down to 58.50 is very likely. That's our local gamma support level. And then if we start breaking up further to the upside, it's at about 6,000. We can run back into where we had prior price action kind of get chopped up and around. On deck this week, we have a couple earnings. We have Walmart. It's pricing in about a $4.62 move. And then the big one is going to be Nvidia. Right now, it's at about 116 vol, which is plus or minus $13.54 per share. We will get a more clear picture by the close of Wednesday, and then we'll near the close on Wednesday to get a more accurate picture of that. I'm going to try to be live on Wednesday. I'm not 100% sure if I can. I've been having problems with my software. But then on the economic front, we don't really have much data. So really, this is all coming from, you can see here, this is at the money vol, and this white line is the current. This one was the prior. And you can see that we did see a large spike here, which is just really the implied vol for Wednesday's close, which is Nvidia. So this is going to be the big one that everyone's going to be paying attention to. Nvidia has a large implied volatility. It can move the market. It affects other names. So just be careful, be cautious, and aware that that will be taking place here at the close of Wednesday. That's all I got for you on today's market brief, everybody. If you haven't done so already, you want to check out our swing trading community. It's only $9 a month. You can sign up annually, and it ends up being $7 a month, like $90. It's not an alert service, but I do give all the trading ticks, the entire auto posting bot suite, including the query channel. So you can get do a lot of cool market research with the query channel. And then also the bots there too as well. I give expected moves, daily, weekly, quarterly, monthly. I give an updated watch list every week, including a tight list, which are stocks that are contracting. All this is for the $9. You get access to obviously the community. I do an update on the daily zones document, which is utilizing this indicator called bridge bands, but I implement it into a really cool document to give you a quick overview of what might be overextended, what might be oversold conditions. It's a pretty cool look at a market from like a fractal view. And then I give some trade idea setups too as well, but once again, not an alert service. That's all I got for you on today's episode. Hope it helps out. See you later.